Hey everyone, welcome back to Corporate Decoder. Today we're diving into NewtekOne's latest financial report, and let me tell you, it's a bit like unwrapping a surprise gift that might contain socks or maybe a diamond ring. Let's find out which one it is. We are going to dissect their performance from last year to see how they're really doing. This is a Form 8K filing, which is basically a company shouting, "Hey, something important happened and we need to tell everyone now." In this case, NewtekOne is reporting their year-end financial results from last year. Think of it as their annual report card, but instead of grades, we have dollars and cents. So this report is dated February of last year. That's when they announced everything. NewtekOne, the company behind this report, is based out of Boca Raton, Florida. Now, before we jump into the numbers, a quick look at their stock situation. They have several classes of securities listed on the Nasdaq, including common stock and a few different types of notes, basically bonds they've issued to borrow money. These notes have various interest rates and due dates, a bit like different loans with different repayment schedules. Alright, before we get too deep, there's always a disclaimer about forward-looking statements. This is basically the company saying, hey, we're making predictions about the future, but things might change, so don't sue us if we're wrong. It's standard stuff, but it's good to keep in mind that any expectations they mention should be taken with a grain of salt. The main event, the company released a press release announcing its financial results for the quarter and year ended December 31st of last year. Let's get into the nitty-gritty of how the company performed. Time to check out the press release for the details. It's like reading the headline news about the company's financial health. Now, let's dive into some key numbers. I wish I could show you, but I cannot because of the instructions. Let's pretend I am scrolling to them and highlighting them as I mention them. The company's total investment income increased significantly from the previous year. This is good. It means they made more money from their investments. However, their total expenses also increased, meaning it cost them more to run the business. The net decrease in net assets resulting from operations needs a bit of explaining. Basically, this measures the change in the company's net worth due to its business activities. A decrease means their assets went down more than they went up from their operations. Now let's look at the company's liquidity, which is like checking their bank account to see if they have enough cash to pay their bills. The press release says, as of December 31, 2024, we had cash and cash equivalents of $31.6 million. That's their safety net. Alright, so that was the financial breakdown, the numbers, the good, the bad, and everything in between. Now what's the verdict? NewtekOne seems to be in a position where their income is growing, but expenses are growing too. Their investments are paying off more, but they're also spending more to keep the lights on. The decrease in net assets is a bit of a red flag, showing that their operations aren't necessarily increasing their overall value. One thing that stands out is the company's liquidity. Having over $30 million in cash is definitely a good thing and provides them with a cushion to navigate any bumps in the road. So is NewtekOne's financial report a diamond ring or just socks? It's more like a mixed bag. There are definitely some positive signs, but also some areas that need improvement. It will be important to keep an eye on how they manage their expenses and whether they can turn things around to increase their net assets in the coming years. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time.